Hi guys, this is Martin from livemarkets.live. We welcome you to a new trading week, the first day of the week, and I'm sure all of you are back on your seats, saddled, ready for a very important week this year. We have three central banks meeting this year. First of all, we have the Bank of Japan, which is meeting today, and tomorrow there will be an announcement. Traders are expecting some tweaking of language. But our view on the BOJ is that they will not make any changes, and we should see a rally in the USD JPY at least 212.3 or 4. And the reason behind this is because if you look at the Chinese currency USD, CNY or yuan, you would have seen that there has been a weakening there, and we are now at 6.8 as opposed to 6.3, which was at the beginning of the year. So the Chinese have involved or have done a devaluation of their currency, and never in the history has Japan not devalued their currency when Asian counterparts are doing so. We do not see a scenario where BOJ is going to tweak the language or strengthen the yen because other Asian currencies are devaluing their currency. So we expect a little more rally in USD JPY, but again, we're not really interested in too much trading in USD JPY because it's a currency that is very sensitive to world risk markets and how risk moves, and so we'll keep ourselves away from USD JPY. There's a minor long which we plan to close probably in a minor loss. But again, the currency of our interest has been the euro dollar. On Friday we had the GDP numbers which came in at just about at expectation. We're expecting a much more robust number. It came in at 4.1%, which still is very good. And markets, the euro dollar rose higher to 1.660 from 1.620, so there's a 40 pip rise there, and that was because the markets were expecting a much better number, probably 4.8%. Either ways, we see that this reaction from here, we'll see somewhere test of 1.640, test of these levels and then fall down again. So euro dollar is in line with what we have been trading and what we have been expecting, but it's been a slow mover. That's because it's holidays, it's vacation time in Europe. Traders are just taking it easy, and also I think they're waiting for the FOMC on Wednesday, which will really set the tone. There's a lot of talk that the Federal Reserve will be far more hawkish than what the traders are pricing, and we could see dollar moving stronger this week. So euro dollar, and because the volatility has been low, you would have seen that the model is actually taking short trades with very small targets, and that's because the volatility is small and it's going to take in those small targets, and then when volatility rises it will have bigger targets. So generally we are going to stay with this trend, and as you know, this trade, the short euro dollar was derived of our daily chart. This is the daily chart, and this is a major trend. Now if you would have seen something that one of our clients has pointed out, and a very valid argument, what he says is the MACD is now at the zero level. Excuse me. And it was at the highs here, it was a lows here. So with MACD now coming in here, prices at the price is not really falling. Do we see the prices to go higher? And he sees a bearish divergence because MACD has risen while prices have still at the lows. That's not the definition of divergence. Divergence is when prices are falling and MACDs are falling. That is what a divergence is. Here the prices have not moved and MACD has moved higher now. Therefore that is not a divergence, but what that suggests is that market is not reactive. In other words, volatility is dead, and that is exactly, even without looking at this, and if you see this kind of a move where there's a very small tepid move in MACD, you can almost guess that this is because prices are not going anywhere. What has happened is prices fell and then it just stayed low. It did not bounce up or lower. Now what would have been a divergence? Well, a divergence would have been if this is falling and prices would have fallen a little more lower to 1.14, but at the same time MACD didn't fall. MACD didn't make a new low, it would have probably fallen a little bit here and then reacted. That would have been a bearish divergence and very much a case for a long. But right now we don't see a case for divergence because prices haven't moved. And MACD has kind of neutralized this move from down. That's because it's been there for 2 months. So nothing. So this doesn't tell us anything really new. Just purely looking at the price chart, it tells us that the trend is lower. This green line, which is the 50 DMA, is still trending down. Prices are now below this. Last week it was above this. Now we're below this. We see a very strong and forceful break of 1.15 probably this week. We've been waiting for a long time, but I think the move will start in August this week once the FOMC is out of the way. So that's a euro dollar. Nothing new to add this week as we start. There wasn't much movement today morning. It is the 4-hourly chart. It's just below these resistance levels. So we see a move to 1.1640 today, and it will decide whether it wants to go higher or lower from there. There is a possible move to 1.680, which will be a very good selling opportunity. Again, all stops can be pulled down to 1.1650. So that's another thing that we can take note of. But if the euro dollar breaks the 1.1640 and with no reaction higher, then we are going down to 1.1580, which is probably the target we were expecting last week. But that should be done today, this week, before the FOMC. So there are two scenarios here. One, prices move to 1.1640 and then reacts up higher to 1.1680. Or the likely one that we are backing is we're going to cleanly break 1.1640 once Europe opens, and we're going to fall down to 1.1580 today, tomorrow. So those are for those who are trading on the day trading. They can look at these levels. Just looking at the hourly chart, you can look at the 30 minutes chart as well. Just drill down a little bit more. So you can see we're just above these trend lines on the hourly, but prices are not going anywhere higher. It's been tepid. It shows that we could possibly fall down. And if you're going higher, then this is the level. 1.1680 is where pressure will be exerted to fall back down to 1.1580. So we'll not take a look at anything else. I don't want you to get too confused, take any other trades. We have the Australian dollar and the USD CAD, excellent opportunities. We also have the USD CHF. Gold is a great trade as well, but again, we'll not look at any of these. We'll just keep it to the euro dollar for the time being. This week we also have the BOE, which will be on Thursday, and traders expecting a rate hike. But what's the price telling us? If you look at the daily chart and the GBP USD, something huge has to happen here for this trend to be broken. Really, we're really falling down, and we see a possible break of 1.29, and then we should see some kind of reaction higher. So that's our call, and this is, this will be surprised if we just move higher. But either ways, it is going to go higher if we break this line here. But if not, we're going to fall down with a big spike down to 1.29, and then we should see some move higher. So that's about it from our side this day, and we'll have more updates probably tomorrow. Thank you for listening. This is Martin.